Welcome, dear traders. US-listed Chinese shares climbed after Joe Biden and Xi Jinping met for the first time in person since Biden took office. However, trading on Wall Street was rather sluggish yesterday. All three benchmark indexes incurred losses. Today, their movements are unsteady as volatility persists. Asian stock markets are also volatile today. The stock market in Japan is rising even despite an unexpected decline in the third quarter GDP figures. The Australian stock market is declining due to falling commodity prices. Futures for US shares climbed. Apparently, investors have seen in controversial statements of Fed policymakers only those signals that they wanted to see. Christopher Waller warned on Sunday that the regulator would keep rising rates before taking a pause. Today, Vice Chair for Supervision Michael Bar noted that inflation is still far too high. However, Lael Brainard said it would be appropriate soon to maintain a slower pace of increases. It makes sense to move through a more deliberate and data-dependent pace even at the December meeting, she added. Despite the fact that policymakers made both hawkish and dovish comments, traders focused only on the dovish ones. As a result, it triggered a sell-off of the US dollar. As the regulator stressed, it would make decisions taking into account incoming data. The trajectory of the US dollar today will depend on the producer price index for October. If the October reading exceeds the September figures of 8.5%, the US currency may climb. In the meantime, the oversold greenback is unable to recover even amid growing US Treasury yields. In the Asian session, it was moving near the lower border of the range of 106.10 and 107.10. On top of that, the US currency is facing bearish pressure because of a rise in the pound sterling and an unexpected slowdown in the consumer prices in Germany. The US dollar index has already fallen to 106.20 versus its main rivals. Analysts believe that the greenback is likely to continue its correction. Nevertheless, at the end of this year, it's projected to grow again. The yen kept extending losses against the US dollar. Compared to other currencies, the yen is the most sensitive to changes in the US government bond yields. However, the Japanese currency managed to resume growth a bit later in the morning. The verbal interventions of the policymakers spurred the demand for the yen. This time, Trade and Economy Minister Yasutoshi Nishimura said on Tuesday he would prefer stability in the forex rates. He also said that decline in Japan's third quarter GDP was associated with a rapid weakening of the yen versus its rivals. Nevertheless, Nishimura noted that a weak yen could help boost exports. The Bank of Japan does not announce its forex intervention in order to prevent speculative trading. Therefore, today's sharp drop in the dollar-yen pair to 139.50 may have occurred amid the greenback's weakness. The pair was trading in the range of 139.20 and 140.60 in the Asian session. The Reserve Bank of Australia Board of Governors believes that the regulator is likely to stick to monetary tightening in the near future. However, the RBA will not publish its own forecast on the pace of rate hikes, so the Australian currency is lacking any support from the central bank. There are other bearish factors such as the falling oil prices and the weak demand in China. However, in the Asian session, the Aussie advanced following a sell-off of the US currency. The AUD-USD pair was moving in the price corridor of 0.6686 and 0.6765. It was trading at 0.6755. And that's all for now. Investors are looking forward to the release of the producer price index, new remarks from Fed officials, and the US retail sales data. Hit the subscribe button and keep your finger on the pulse. See you soon.